All right, hello everyone. Welcome to the Big Picture. My name is Joe Cruy. I'm on the institutional coverage team at Paradigm, in the weeds around everything crypto vol markets. And I'm joined here by my co-host David Brickle, who's on our sales team and is our resident macro expert. And today we have a featured guest, Sean McNulty from CoinHako over in Singapore, a former colleague of mine from our JP Morgan days. So very excited about that. Welcome, Sean. Really glad to have you.
Cheers. Yes, thank you for having me.
Yeah, for sure. And just to
It's to have you
begin,
on, Sean.
yeah, would love to hear about your background. What brought you to CoinHako and why you decided to jump into the crypto vol space.
Yeah, most definitely. So as you mentioned, former was an FX options trader, JP Morgan, former colleagues in the same sort of realm. But as we were discussing earlier, it's got, I guess, equity derivatives, FX options. You end up pretty siloed. But yeah, so my journey, it was, I can trace it all the way back to Toronto when I was an FX spot trader at CIBC in terms of my crypto journey, where I used to have an Airbnb side business, which is kind of it was an interesting experience anyway, because you obviously got like lots of guests and all these other sorts of things. And there was a cryptocurrency conference in Toronto, and some of my guests were there. And in fact, I've looked them up, and they're still in crypto. But this was back in 2014. And so it was very early days, and it was the first I kind of heard of it. And these guys were like obviously super enthusiastic about it, and they tipped me in Bitcoin. Like, so they gave me a Bitcoin tip, like forced me to set up a wallet and everything, because I guess that was their thing. So I've been back on that. I didn't know what Bitcoin.
What is that tip worth these days?
Yeah, well, I cashed out. It was like a $10 or $20 tip that when I went, because then I forgot about it, and then Bitcoin ripped one of the rips higher, and I ended up being like $500 or something. I was like, oh, this is honestly,
that's unreal.
Anyone who's in markets is like, all of a sudden that perks your interest when you get something that like 20x or whatever. You're like, oh, this is an asset class I should be paying attention to. And so yeah, I'm originally from Canada. I did an undergrad at University of British Columbia, MBA at National University of Singapore. In between the undergrad and the MBA is my time when I had my time in Toronto as an FX spot trader. Post my MBA, I joined the FX option desk at JP Morgan out here in Singapore, and was there for about 7 years, trading everything from like G10 to EM to like exotics and things. And then at the 7 year mark, you kind of you start to contemplate if you want to continue on the sort of the corporate path or kind of like look into something else. And a friend of mine had introduced me to derivative kind of late, like I guess it would have been early 2021. And I had no idea there was even a cryptocurrency options market. I'd been following cryptocurrency because of that whole Airbnb experience. And it's something I've been interested in. And Jamie Dimon's not the most supportive guy of cryptocurrency.
Oh no, yeah, I know that well. He was basically shooing me out the door when when I was like,
oh, so it was amazing how
you basically were like, I could get 50 times by doing the spot. If I can do crypto options, then I can make that 1,000.
well, then like it was like the volatility, the asset class, and as a vol trader and everything, you're thinking like, wow. And you're used to like when I was in like FX is a little bit more interesting now, but for a good portion of my 7 years trading FX options, like euro was on like a 4 handle, and like nothing's moving, right? Like there's no interest rate differentials across FX, and so you were like, it was a very like also you see like Bitcoin and ETH with like at that time their vol bases are like 80 and 100ish sort of thing, and it's like, oh, okay, this is looking pretty interesting. And yeah, so then my friend kind of told me about it. I started sort of. I first, of course, checked with compliance at JP Morgan to see if it was something I could, in fact, do, and they didn't know about cryptocurrency options either. So they said go for it, right? Like there's no sort of cons that way. And Jamie Dimon, he talked specifically about trading spot. He never said anything about trading derivatives. So I was like, all right, this should still be okay. And so I got into it that way, kind of just PA, kind of exploring the marketplace, and just frankly really enjoyed it. And then CoinHako here in Singapore, it's the largest exchange here. And they were essentially looking to expand their trading operations. I think a lot of cryptocurrency firms are looking to kind of move from just sort of the linear products to just essentially offer more products and services to, in our case, like institutional and high net worth sort of clients who have crypto holdings and maybe want to generate some yield on them. And so they had become aware of this and were exploring, there's the lending and borrowing side of the business, which obviously was a tricky year in 2022. And then another way you can generate yield is through volatility, which is kind of a more time-tested one versus like the tokenomics or into lending and borrowing could just be a little bit trickier with counterparty risk, not exactly as easy to decipher as it is like compared to banks and things like that, where you have a bit better idea. I learned them sort of expanding the trading desk and got in touch with some people there. Kelvin, who's like the head of the desk. We ended up doing some interviewing and just discussing and really hit it off well. And so I ended up leaving JP Morgan and joining the desk. And it was quite a big jump in the sense that so Kelvin was started about a month before me at CoinHako to head up the sort of trading desk and build it out essentially. You go from a setup at a bank that's been trading obviously for years and invests like hundreds of millions in technology every year, and has a team of like 30 PhDs worldwide working on like all the different applications and software and tools and things, which is very sort of computationally intense and mathematically intensive when it comes to derivatives. And then at CoinHako, we had to set that all up from scratch. So you start to realize, like, I did it quite a bit.
And doing it on an asset that has a 90 vol rather than a 40.
Yeah, that, and then you compound that too with the fact that you don't have a great data set for crypto derivatives because it hasn't been around that long, which is exciting and also challenging at the same time, right? So it's like, are vols high or low? Like, I guess they seem to be compared to what, right? And then you have because it's such a new evolving asset class, you have these dynamics change. So I remember when like DOVs became huge, and all of a sudden you had this like as they grew and the assets under management grew and everything like that, it started to really impact the skew of the curve, the massive Friday selling and everything like that, and then you've seen that sort of dissipate a bit after 2022, where you don't have the same sort of AUM and so it's like, even if you were to pull up past data, you're in a lot of cases talking about a completely different marketplace with like different dynamics, and so it's not that useful if you're trying to like identify relative value or opportunities on the vol surface. So so that it's going from that to like something where you have FX vol, you get a much more richer data set, to something where like your data is very limited and you're trying to just kind of build something from scratch. So it was a challenge, but it was a ton of fun, and we're I guess a year into it now, and as you guys know, kind of winning more market share and things like that. And so it's been an exciting year for sure.
Yeah, no, that's great.
Sure.
Go ahead.
Sure. Do you think? Do you think? Obviously, I'm from an FX background as well, and FX options, though not trading anymore. Do you think, given that journey that you've been through, and obviously you were setting a lot of stuff up, would it be more plug and play if an FX option trader from JP was to join you now? Or is it still, just getting to learn completely kind of different relationships and what have you? And it's quite a different beast, if you like, to what you'd be trading in FX options.
I think it's much more plug and play now for us because we just spent so much time building tools. So like the fact that we now have like sort of our own internal vol surface, our Greek-D spots, like a much more sort of like before we didn't even have like a proper Greek-D spot sort of metrics, which just to be really tough because you're looking for like, like how your gamma holes and like where you exactly get your long Vega delivery and your risky D spot and all these sorts of things that especially in crypto where the vol surface can move so violently, where like riskies will go from like 8 vols for calls for like 10 vols for put in like a matter of like 2 sessions. Like it's always amazing when I first get up and I read like the paradigm commentary of the overnight price action, and it's like so one way or the other way, and like the flows in the buying or selling can be quite aggressive. So it's like you really got to if you get delivered into like long or short riskies and the market moves against you, it can be super painful. So you really have to be aware of all that deep spot exposure.
There's some sales guys right now at JP Morgan listening to this going, you spent all that time complaining about lack of volatility.
I know. That's exactly it. Well,
you wanted volatility, you got it.
You really notice that in trading, right? Is that with traders in general and like sales as well, where it's like no matter what people complain, I think it's probably a human trait across everything. Because like, yeah, when balls, nothing's moving, it's like, you can't make any money, nothing's moving. And then when stuff's moving, it's moving too much. You can't make any money because it's too balls. It's like, people always are trying to make excuses.
Well,
So it's like,
I mean,
they always have to try to avoid that.
yeah, I mean, that's the story of crypto vol over the past, what, like, 6 to 9 months, right? I mean, we went from like, I mean, no pun intended, lunacy, right? Like back when, Terra Luna imploded into like FTX, and then Q4, and then you look at the vols, front end vols and BTC are trading in like 20 handles, right?
Crazy,
and then now you have the rip back up, and then my point is, like, in crypto, like the vol regimes just seem to change so quickly, and can be very, very dramatic in the way that they change.
Yeah, well, especially Q4 of last year. I was amazed by, like, our realized vol was lower than equity vols, right? Like, it was amazing. I think at some points, yeah, and like it was pretty remarkable in that, like, just the fact that the amount that it came off, and especially given like all the stuff that was happening in crypto. I mean, you had some pretty like monumental sort of developments in the crypto sort of specific space, and yeah, and it was just amazing how little things did move, and then obviously you get the January, and all of a sudden everything's back on, and I think like, especially you could really sense like what in terms of regime shifts, and I guess the interest out there in the markets, and with the move higher, and in combination with the lack or the less amount of money in the DOBs, because I just don't think the market has the same sort of long gamma topside that it once did. And it's amazing how it just takes the lid off of things, right? Because like before you get these pops, and it's like there's so much long gamma out there that just got stuck mud rather easily. And then you can see as soon as that sort of supply demand sort of dynamic changes, all of a sudden the moves higher, like you just don't have that same sort of they don't run into that same sort of like wall of sellers or people taking profit or long gamma, right? And it's something that, I think it caught a lot of people by surprise. And then all of a sudden, I think now you're seeing with the subsequent moves, I think people have covered that hole quite a bit. But it's it's like if you were to take data from last year and try to like model like the surface, like even now, it's like it's one of the things, challenges we've been working on this year, is that the dynamic just from Q4 of last year, this first quarter kicking off, it's like any sort of Z-score metrics or like historical levels, like on our own sort of ball servers, where it's like, oh, this trade makes sense. Like you can't really have a ton of confidence in that anymore.
No, anything that you're doing in crypto ball based off of a normal distribution is going to get yourself knocked.
Yeah, exactly. Yeah, it's like the distribution is, and like, and then even like the risky skew. I thought Greg actually on the last episode made a really good point when you look at like Bitcoin riskies versus equity riskies and the beta between the two and things like that. And like I think that like those sorts of dynamics, especially as it starts to get more intertwined with like traditional finance and things, it'll be interesting once they start to get involved and start looking at opportunities like the one that Greg was highlighting there, with the equity token call skew versus the Bitcoin call skew.
Yeah, and we had that big move where we just saw the very extreme spot vol correlation, and when we saw all that upside being bought, and to your point, this is actually a really good opportunity for me to share my screen around what we're talking.
Sweet. Oh wow! Okay, very cool.
Yeah. Okay. So just in terms of like the dealer gamma exposure, right? Like just recapping what you said, like the DOV total value locked is a lot smaller. A lot of like the vol sellers and overwriters, sure, there definitely is still some that are there, but it is not to the same extent as what it was, right? You're not running into this wall of calls on the upside anymore. And I think that is really, shown well here by just looking at the dealer gamma exposure, right? Like, like you look at the GVol Bitcoin GEX here, right? So this is Amber Data's basically dealer gamma exposure index. And look at the exposure on the upside here, right? So the red means dealers are short, because all the flows that we've been seeing since the beginning of the year have been all this crazy outright call buying, or like, or not even just necessarily outright calls. There was a lot of like sell one buy twos as well, and it's kind of weird because like locally it feels like we're kind of stuck, right? We're kind of stuck in this like 23, 24K range, and this chart does a good job perhaps explaining that, because you can see the green bar there right around our current levels. But as soon as we start rallying, my view is, that positive spot vol correlation is going to come back. And perhaps that big move in that, in the risk reversal that you're talking about is just going to start reverting the other way again, because, it has been reverted back to kind of like that 2022 regime, over the past couple of weeks.
Yeah, I think that's like such a tell too, because like I think I forget, there was some sort of high tick in like the 1 month riskies, like approximate 1 month riskies, where I think it was like 20 vols or something, but you could see the scramble on that initial move, and how quickly the risky D spot reprices as soon as you go higher, like you say, like 25K or something. You see that sort of dash for topside, and it's like because everyone's like kind of when things aren't moving, people aren't as worried about it, and then all of a sudden it starts going up there, and like as the Amber data shows, like there's obviously that gamma pocket there, and you'll just see those riskies just like all of a sudden swing massively, right? And all of a sudden you end up with like 10 vol risky skew repricing is like something you would almost never see in FX. Like,
yeah, because the reality is like when you just look at like make your balance sheet, and we had the QCP guys on a few weeks ago talking about this, like the demand in which people want to trade and do these sizes are not enough for the market to be able to reasonably absorb and hedge, right? So you have these like crazy moves, the vol is just extremely high, and then as soon as you kind of see you start having this move, number one, some of our big taker clients will kind of see the spot move, and then they're like, oh, boom, here comes an RFQ on like 250 like Bitcoin 1 week calls, right? And
you're lucky 250.
It goes further and further, just ratchets, right?
You guys have been getting the 1,000 BTC calls. It's like, it's interesting too. It seems like the notionals are jumping up a little bit as well, in the sense that like they'll be like 500, 1,000, like like big clips, like compared to what we were seeing last year, essentially.
Yeah, I mean big clips,
I think,
but also like clips that are actually meaningful risk, like not like the Ethereum like 3,000, 4,000 strike call fly stuff. We're seeing like actual like 25 to 35 delta stuff, like in the 1 week to 1 month buckets, right?
So I think as well it feeds I think that feeds what Gordon was saying the other week, right?
Yeah, David,
spot price goes up, then everyone's got a lot more collateral to play with.
Yeah. David or Sean, did you hear what David said? Did you lose him?
Oh no, I heard him. Definitely.
Then I lost you.
It's
no
right.
Yeah, Joe, I was just saying, it kind of ties in as well, with what Gordon was saying the other week, talking about, when spot prices are higher, then, there's this convexity where spot prices are higher and then you've got more collateral to play with. So therefore you can take more leverage, more risk. So you kind of start to see that increased size come back to the market. And we're definitely seeing that, right?
Yeah, I mean, but now we're kind of like stuck. You know what I mean? Like, I mean, maybe David, this is like a good transition point. And we were talking about it, like, we had the rally, then it kind of felt like this NFP data, kind of just took the wind out of the sails a little bit in terms of the spot rallies. And then from there, we started to see a bit more vol supply come in, and again, kind of like that engineering sort of process of self-fulfillment in crypto vol, where we just kind of feel stuck. I mean, kind of what's your view on the macro here? I mean, I know you have been quite bullish, but it'd be good to hear kind of your view as well as Sean's view, and in terms of where we go from here. Because I mean, I don't know, the conversations that we have is like, look, if we kind of break higher another 1,000, 2,000 points in BTC, maybe that's the catalyst to really kind of ratchet us up to 27, 28.
Yeah, it's funny just looking at like the charts, the ETH chart. Like we're kind of in the negative gamma zone, right, for ETH.
And you've seen that in the realized. It's been a little bit more gappy.
Yeah, but I think so. We started writing the Paradigm newsletter, and I wrote the one on the weekend, and I called it a pause for thought. And there were kind of two reasons behind that. I thought, firstly, we had a lot of central banks last week, the Fed, Bank of England, ECB. And I called it a pause for thought because, we saw central banks last week kind of, start teeing up the pause. I think the Fed particularly caught everyone a little bit by surprise, who was expecting Powell to push back on like the hawkish rhetoric. or the you know, to be a lot more hawkish and push back on this like easing of financial conditions that we've seen. But actually, he was pretty relaxed about it. He kind of phrased that within the context of the past year, in which you know, financial conditions pattern. So obviously, the market ran with that. Bank of England kind of teed up a pause. And then even the ECB sort of hiked 50, confirmed they're going to go 50 in March, but then they revert to a data dependency. So we kind of have this, which we've been talking about for a while, sort of moving into this pause, which is a vastly different macro regime from last year, where we were, you know, in this aggressive hiking cycle. And then obviously Friday came along and an absolute blowout non-farm payroll number, which there are some January sort of issues in terms of adjustments that get made to that data, but there's no getting away from the fact that the labor market is pretty strong, and this is something the Fed's looking at. The flip to that was the actual earnings data continues soft, and both you've seen Jay Powell and Brainard allude to the fact that there's no real sign of this kind of 70s wage inflation spiral. So I think they're a little bit relaxed about it, but obviously that data kind of made everyone go, oh, maybe the Fed are going to be engaged in this hike cycle for longer. We had a cuts in the curve, and that price. So it's kind of, central banks are going to this pause, but it kind of felt like it just paused the momentum that we had within markets. And then that's kind of led into, we had Powell at the Economic Club yesterday. Again, I kind of think he seemed quite lax to everything. And it's kind of, I think he's trying to lead the market still into that pause. And I think the key phrase for me that he said, and I actually think this could turn out to be quite an important phrase, because I don't think, you know, central banks use words flippantly. And he sort of repeated the phrase that he used actually last week about the beginning. We're at the beginning of the disinflationary process. And it kind of reminded me of November 2021. When he basically said words around the fact that, you know, it's no longer right to call this inflation. It was kind of very, you know, and I kind of felt he keeps emphasizing this disinflationary process has begun. I kind of think he's still leading us into that support. That's still strong. I think the way the Fed are looking at the world is that, you know, they're going to pause and then keep rates for higher for longer, and certainly longer than what the market's pricing. So I think we're just trying to all digest that at the moment. But I don't think it changes the fundamental dynamic. We're sort of transitioning from this sort of sharp cycle to now sort of the coming pause. I'm worried about how rates are trading. I'm worried about how the dollar's trading. And they're two big sort of macro factor inputs into that kind of framework of what maybe drives crypto and broader risk. However, the flip side to that is we talk about liquidity and flows. Liquidity is actually getting easier, and you've got the TGA with the US hitting the debt ceiling, the Treasury General account, which is essentially the Treasury's checking account at the Fed. They're having to draw that down as they hit the debt ceiling and can't raise new debt. So that's quite a powerful offset to quantitative tightening. You've also got the PBOC in China, the Bank of Japan, their expansion of their balance sheets outpacing that of the contraction with the Fed and the ECB. So the G4 central bank balance sheets are actually expanding. So liquidity is a little bit better. And then there's the flows and the positioning aspects. And I still feel like this market's unpositioned for this sort of shift in dynamic. I also think, given the underweights that people were carrying into this year, we're now seeing guys that are having to chase performance. Obviously, sort of Bitcoin's gone 40% or what have you, higher equities have all come flying out the blocks. So now people are chasing performance. So I kind of think the flow dynamic, you're still going to see money come into this, and we're also seeing money sort of come into back into crypto funds, right? We've seen various sort of examples of that. So money's flowing back into the space. I think the market's still under positioned. So I'm still generally constructive. But I think it's going to be make or break, I guess, on the inflation data next week. So yeah, more cautious here. I think the market's just going to tread water a little bit into inflation next week, but generally, I think the dynamic's still there, and we'll sort of push on to the top side throughout this quarter.
Definitely. And actually, I think a few things, pick up on a few things you mentioned there, David. Like I think with Powell, one of the challenges he faces, he was so hawkish for so long that anything isn't this like uber hawkish comes off as like in the dovish sort of category, is that he leans so hard into that sort of narrative. And I think there was one presser where he was told that the equity market was higher when it wasn't. And he like immediately started talking about like I will hike rates to the moon until like asset rate. And so ultimately if the jobs number, I mean, it's interesting because I think I guess it makes the soft landing scenario, which people are seeing as like I guess increasingly unlikely, almost plausible. Like it seemed like it wasn't going to happen, but it's kind of interesting. Like you say, the average weekly wage numbers were lower. Yeah, this massive jobs beat. You're starting to see the disinflationary. He's probably like secretly hoping, like, if I can just steer this in, it'll go down as ever sort of bigger. His legacy was like it'd be pretty remarkable if he somehow, because for all their talk about like we want everyone to lose their job, and that gets a lot tougher when people start actually losing their job and the political pressures come in and everything. So and then the fact that he has leaned so hawkish, I think it's very interesting, those dynamics working together. And then I also tend to agree that I don't think a lot of people are participating at this point. A lot of people missed that initial move. So, I mean, even like the Nasdaq's up, I think like 15 or 20% or something like that. You've obviously had the Bitcoin rallies, all these inflows, just all these short liquidations. And it's not like, you still hear a lot of people talking about another like lower 15K. And it's like, to me, that gives me confidence that the move, like if I had to do it on a probability weighted basis, it is probably going to still has room to go higher, because it's just, it's when people start to get more euphoric about it that it tends to dissipate, and there's still quite a bit of negativity, it seems, out there. You're saying this CPI coming up. There's, I guess, you got the two prints before the next Fed, but you get like another sort of soft CPI, and then all of a sudden, like you get up to that sort of short down pocket of BTC. You see more sort of inflows chasing the move. I think you could really see this extend. And another point that I thought was a really good one, that Andrew Kang, the Twitter profile. I guess it sounds like he's like a venture capitalist, but I think he's also a Paradigm client, and I think he's actually a Paradigm shareholder, if I'm not mistaken. But he had made a really good point about anyone who was going to sell crypto, like who was going to tap out of the market or didn't believe in it anymore. Like all the weak hands have kind of washed out. So anyone who was long all through 2022, probably like the three of us and a few other us, right? Or like some longs anyway. I mean, if you didn't sell in 2022, I mean, you're not probably going to sell here. And I think you run into that dynamic where you kind of run out of weak hands, and then like the people who have it now, you end up just with. The people who own it aren't willing to sell, and then you have this kind of capital inflows. And ultimately, whether it's Vega or Gamma or Spot, it's buyers and sellers, right? So if you have more buyers and sellers, prices go higher, and vice versa.
Yeah, no, he certainly loves showing that narrative. But in terms of you just look at like the futures positioning as well. It kind of like feels like there's like this bid underneath the market, right? We felt it back in like Q4. It was like, it was like around like that 16,000 level, right? Low 16,000. Whenever we get down there, the perp open interest would increase, and then then somebody would be kind of bidding it up. And this very similar thing's actually happening now. I'll share my screen one more time.
Yeah, and actually one other dynamic that I think is also worth noting, just in terms of is the perps funding versus like on these spot moves and things, is that you'll end up with like the perps funding, like not to get like into too much of the technical things, but like it really starts to blow out, right, in terms of where spot is and where the derivative perps are, and like it kind of speaks to the option positioning as well. And so that scramble higher. And last year was the perps funding was reversed, because you end up with a lot of people end up having to be short the futures or whatever, like to get ahead of the moves. And so that dynamic really flips as well, where on these moves higher, you're also like you've got to also keep in mind that you're probably gonna, if you're long like the perps futures versus whatever options position you have or whatever, that there's gonna be a carry cost associated with that. And so it's like it's really an interesting dynamic we've seen this year as well.
Yeah, no, that makes total sense. And just in terms of like the BTC price versus like the open interest. So in this chart, I mean, look, so the market started rolling over earlier overnight, right? We were rolling over to 22,800. And then look what happened to the open interest in the perp. It
Yeah.
rips up, right? Because somebody's certainly trying to catch that knife, right? So you definitely seems like a lot of the weak hands are out, and when we do have these sell-offs, right? There's kind of some people out there that kind of have a pretty big war chest that are willing to step in front of this thing and keep it going.
Yeah, definitely. And it also
Yeah.
feels like too, to a certain extent, that a lot of the top side buying are trading it live, so they're not they're not doing any sort of delta hedge versus
Oh yeah,
options. So
no
I think
way.
that is a big, yeah, which is a big, I guess, I mean, it's something that really drove equity markets last year. All the Reddit,
Yeah,
all those
yeah,
guys who are just
exactly.
paying the market for gamma and then not doing any sort of delta hedge, and then you end up like just kind of, the gamma is a powerful Greek. It can really get things moving. So you're really
I mean,
seeing
and
that.
it's great, and we've touched on this on other episodes. It's like crypto derivatives is still so small, right? Like, how is like gamma like actually like impacting spot when like people at JP Morgan don't even know a crypto vol market exists, right?
Exactly.
It's just
Yeah.
like it's just a crazy dynamic. And to your point, in terms of none of this is going up delta hedge. Like there's a little bit, but not much because the crypto vol market is so nascent. Trading delta hedge crypto options is kind of a big pain in the ass,
Mm-hmm,
right?
mm-hmm.
Because you don't have, in terms of like the liquidity and the number one, if I'm trading on Deribit and I want to buy a call and sell spot against it, well, number one, I can't sell spot against it on
Mm-hmm.
exchange because I
Yeah.
can't do that on Deribit. But so I can either sell the perp or the fixed strike future, right? And
Yeah.
liquidity isn't great there, right? So
No.
like to your point, like pretty much everything that we've seen from a directional standpoint has gone through live. And sure, there's certainly that the case that these guys are kind of doing it off exchange and selling spot on the other side. But like I would be quite shocked if that was happening, from the conversations that we've had at Paradigm.
Yeah, and another thing as well that I just think is interesting, and maybe talking my own book, being someone who comes from the sort of macro angle to crypto quite often, is it felt to me like crypto, and be it because of its high beta, be it because of the kind of pseudo play on the fiat monetary system, it kind of felt that crypto was the first asset class to really sniff out the hike cycle. So when Powell said back in November 2021, we're dropping transitory, pretty much that was when Bitcoin and broader crypto topped out, and then was the first. Someone I saw on Twitter describe, crypto was the first one to eat shit, right? and
Yeah, yeah.
it ate it hard. But I kind of think, and this is, I mean, the thing with macro that's kind of hard is that these turns tend to play out right over, and they tend to be sort of longer, bigger picture kind of dynamics, that like even now we're now kind of in that uncertainty in terms of is growth, and is inflation going to turn back higher, and what does that mean for the Fed? But ultimately we're in this term whereby we're nearing the end of that hike cycle and we're going into a different sort of monetary regime, and I kind of feel that crypto again is leading that and picking that up and starting just to sniff that out. I used to actually think, Sean, I don't know, I used to say that about FX actually. I used to think FX was the asset class that sniffed out regime change quicker than other assets, because say the Fed pause, the front end of the rates curve isn't going to do anything, but the dollar might start to soften and kind of just allude to the fact that things are going to get easier and maybe cuts follow that. But it's harder to price that in a rates curve than it is in other asset classes that have, I guess, a little bit more kind of nuance to them, and no more so than crypto. So I kind of think that's interesting. I also think there's a risk reward element to all of this, right? Crypto, say, had so many black swans thrown at it, that if you're looking, and if you can accept the volatility in crypto and that kind of volatility adjusted return, you kind of probably look at things now and say, let's say, I know we have another down leg, and there's another 30% drawdown in crypto. you kind of weighing that now against the potential, we could have, a 2x move in crypto. And it's kind of that sort of risk reward is pretty stark. That I think there's a lot of particularly crypto risk managers looking at it going that we got to be long this, because the upside is 2x, the downside is half x. Or
and that being said, I mean, a lot of the flows, right, that are going through Paradigm, like there's some that smell like, okay, like this guy, sort of, FOMO wants to capture the upside, but then there's a fair amount that like, no, that's kind of just like an upside hedge, right? Like I cannot be short, right? Or
exactly.
I'll rephrase that. I cannot not be long this market, right? Like in some capacity. So you do see some like the wings, in the 30,000s that are also trading that kind of feel, less like, oh, okay, yeah, let's FOMO into it. It's like, no, I just need to have some exposure here, because if I don't, I'm screwed.
Yeah, there's definitely that. The asymmetries are really is like I guess something that I think is on the top of a lot of people's minds, in the sense that like your downside versus your upside seems extremely skewed at given the price action and the global macro and everything that's going on. Because let's say even CPI does come in hot, like you say, you're back down to 20K or something. It's like, okay, fine. But let's say it comes in soft and this pivot really starts to gain momentum. It's like, yeah, like, are we back up? Like, it's not unrealistic to be back up to 60, 70, 80K. I mean, everyone's price target at the end of 2022 was
500.
Yeah, exactly. Well, I guess the latest was 500 from ARC, I believe, right? Yeah. So, but I mean, you have and it's one of those asset classes that can really move to the upside. So I think that's a huge factor. And then you've also, like, even with those sort of wingy top sides, it kind of relates back to what we're talking about in terms of the historical data set. Are those like 5 delta calls really like priced properly? Like, I don't know, right? Like, because there seems, you have to wonder, like, we're kind of using traditional finance models to like approximate where like a 5, 10, whatever delta, and one of the things I'm always so impressed with in crypto vol is like, it's hard to buy like a 5 delta euro options. Like, no one wants to sell that, really, right? Like, it's one of those things that it's like, you don't want to be the trader who's like got all this like really short wingy stuff you got almost no premium for, that you're gonna have to explain to somebody if stuff just rips, right? But in crypto, it's like you can get pretty decent liquidity in like the 5. Like, there's people who are like, you can actually get that. And then the question is like it might be good value there. Like, I don't know. Like, it's just one of those sort of interesting things where, because the data set's relatively limited, and we're maybe using models that aren't they're kind of adapted from other asset classes. It does raises some interesting questions in terms of where the opportunities are on the surface.
You can leave it there.
Any
final takeaways, or David?
I mean, tons of fun. Like, I had tons of. No, sorry, David, you go first.
No. Go on, Sean. No, I'd like to hear your kind of closing thoughts. Yeah.
Yeah, well, I just really appreciate you guys inviting me on. Obviously, CoinHako really enjoys our partnership with Paradigm. We enjoyed kind of market making on your platform. It's like, to be honest, it's the best sort of direct dealing. Settlement through the exchange, of course, but it's the best platform I've seen. And in FX, they don't have the equivalent of Paradigm, and you're still manually booking tickets and like accepting. It's like it's a huge advancement from even what I was dealing with on in the FX option side. And I mean, you're still doing it on chats, a lot of things where you're pinging someone on the chat, and the fact that you guys have been able to set up a platform that everyone enjoys using, that's easy to use, fun to use. And automatic settlement, the APIs and everything, it's super impressive. So we really enjoy being a part of that, and providing liquidity to the platform, and look forward to a very growing things in 2023 as like CoinHako expands across Southeast Asia, and you guys continue to expand your operations as well.
Yeah, I appreciate that. We always, especially to my JP Morgan buddies, when I describe what I'm doing, it's like, we're basically building TradeWeb on steroids for crypto derivatives. But on that note, David, how about you?
Yeah, I guess just for me, certainly on the macro side, I think we're in just for a little bit of a more difficult period. A little bit concerned about rates and the dollar as we just repricing a little bit after the strong data. But ultimately, I think the standout thing for me is Powell's emphasis on this is the beginning of the disinflationary process. I think we're still near in the pause. So I still think that's constructive for risk. I think liquidity and flows continue to point to more upside, but obviously inflation next week is going to be a big data point, and we'll know more from that. But I'm still pretty constructive here.
Yeah, absolutely. And what we've been seeing in terms of the flows, definitely still skewing to the upside, despite the less interesting spot action. But if we kind of can break, that 23, 24 level, perhaps with the CPI being that catalyst, I think we could potentially see, a rally from there just based off of the dealer positioning. But on that note, thanks for joining, and we'll see you next week. Thank you, Sean.
Yeah, cheers,
Cheers,
Sean.
guys.
Thank
Have
you,
a
man.
good day
Thank
ahead.
you.